Welcome to today's market report. European stock markets are seen opening mixed on Wednesday as investors digest the news that President Donald Trump has ended negotiations over a new coronavirus aid package. The DAX futures contract in Germany traded 0.9% higher, CAC 40 fell 0.2%, FTSE 100 was flat. Donald Trump ended talks on Tuesday with Democrats on a new stimulus package for his pandemic-hit country, tweeting that after he wins the presidential election in November, we will pass a major stimulus bill that focuses on hardworking Americans and small business. While this news hit Wall Street hard late Tuesday, European markets appear to be more sanguine in their reaction, taking in that Trump is still looking for a stimulus package if he wins in November. Federal Reserve Chair Jerome Powell called once more for additional fiscal support from the government, warning of the risks if authorities did too little to support the economic rebound. Meanwhile, the total coronavirus cases approaches 39 million globally, with parts of Europe still suffering badly from a second wave of the virus, despite signs of the infection curve flattening again in countries such as Spain and Italy. This fresh bout of COVID-19 risks delaying the Eurozone's economic recovery. European Central Bank President Christine Lagarde said on Tuesday, "We now fear that the containment measures that have to be taken by authorities will have an impact on this recovery. So instead of that V-shape we all long for and hope for, we fear that it might have that second arm of the V a little bit more shaky." The latest German industrial production release put this into perspective, falling 0.2% in August compared with the expected 1.5% gain. Oil prices slumped on Wednesday, weighed by the reduced likelihood of a new coronavirus relief package as well as a larger than expected build in crude oil supplies. Crude futures traded 1.4% lower at $40.10 a barrel. Brent contract fell 1.2% to $42.16 per barrel. Gold futures fell 0.9% to $1,891.40 per ounce. On the FX front, the GBP-USD pair has failed on its initial test of the middle September high at 130.08. The market charted an outside day to the downside, and although we are unable to rule out a slightly deeper move to 130.70, this seems less likely. According to Commerzbank, should the market fail in the 130.70 zone as expected, we should see further losses to 124.45 and then 122.50. Markets are trying to stabilize after Trump tweeted support for several measures, contradicting his previous announcement about ending talks with Democrats. US politics, the Fed's meeting minutes, and a speech by Lagarde stand out. The latest reports from the EU-UK talks suggest some progress has been made, yet fisheries remain a sensitive topic. GBP-USD is on the back foot amid dollar strength as Prime Minister Boris Johnson is considering additional restrictions to curb the disease. The sharp and swift sell-off appears to be overdone, and while a dip below the overnight low of 128.64 would not be surprising, the next support is at 128.25. Traders will keep eyes on the risk catalysts ahead of the FOMC minutes this evening. Eurodollar is now seen navigating between 116.40 and 118.20 for the time being. The pair is currently trading near 117.30, having hit a low of 117.25. The exchange rate fell by 0.4% on Tuesday, invalidating Monday's bullish falling channel breakout. Industrial production in Germany unexpectedly fell in August, in the official data showed on Wednesday, suggesting that the recovery in the manufacturing sector likely lost momentum. Currency traders seem focused on Trump's decision to abort negotiations for additional stimulus until after the election. The dollar index edged up 0.19% to 93.922. The cancellation destroyed the sense of calm regained in the market after he was discharged from Walter Reed on Monday after being treated for COVID-19 and decreased risk appetite as hopes for the stimulus measures to be passed before 3rd of November evaporated. Trump's move also increases the downside risks to the U.S. economy, which was already shaky but could increase safe harbor flows into assets such as the greenback. The reaction is a type of risk of trade to buy the dollar and the yen against other currencies. Without additional stimulus, the U.S. economy will slow and the global economy will slow. Dollar yen was up 0.1% to 105.68. This is today's market news. Thanks for listening. We'll see you next time.